Hi, my name is Sally, and I've been in finance for the past 30 years. 30 years ago, I made every mistake a trader could make. But over time, I learned that real financial freedom comes from discipline, patience, and understanding how money works. Today, I want to share those lessons with you. So let's start with the most important question. What is trading?
You may have seen many trading videos on YouTube, Instagram, and social media, but many beginners still feel confused about what trading actually is and how it really works in the real world. So in this video, I'm going to explain trading in a very simple and beginner-friendly way so you can clearly understand the basic concept without confusion. So watch this video until the end because after this, your understanding of trading will become much clearer. So what is trading actually? The meaning of trade is very simple. Trade basically means exchange. To understand this better, let's go back for a moment. In older times, people used to follow the barter system. They exchanged one item for another based on their needs. For example, someone might exchange rice for wheat, tools for clothes, or goods for other useful items. People exchanged things that had value to them. Over time, the system became more modern. Today, instead of exchanging physical goods, people trade things like stocks, currencies, crypto options, and futures. So the simple meaning of trading is understanding market movement and trying to make profit from price changes. Markets move up and down every day. Traders study those movements and try to make decisions based on analysis and market behavior. Still sounds confusing? Let's understand it with a very simple example. Imagine a fruit vendor goes to a wholesale market and buys apples for $50 because supply is high there. Then the vendor takes those apples to a local market where demand is higher and supply is lower. Now the vendor sells those same apples for $80. That means the vendor made a $30 profit by understanding supply, demand, and pricing. This is very similar to how trading works. Traders try to understand where demand is increasing and where prices may move next. In reality, trading is not magic or a secret formula. A large part of trading is understanding supply, demand, timing, and discipline. But remember, trading does not only involve profits. Losses are also part of the market. Let's continue with the same fruit vendor example. Suppose the vendor bought apples for $50 and planned to sell them later for an even higher price. The vendor waited too long, expecting prices to continue increasing, but instead, the market price dropped to $40. At the same time, the apples started going bad. Now the vendor is forced to sell them for only $30. Instead of profit, the vendor takes a loss. Why did this happen? Because the decision was based on assumption instead of proper analysis. The same thing happens in trading. If traders make emotional decisions or ignore market conditions, losses can happen. That's why three things are extremely important in trading: timing, analysis, and discipline. Good traders focus on managing risk and making smart decisions instead of chasing quick profits. So the simple idea of trading is this: buying at the right time and selling at the right time while managing risk carefully. By now, you should have a much clearer understanding of what trading is and how market movement creates opportunities for traders. In the next lessons, we'll also explore topics like candlesticks, trends, options trading, futures trading, and beginner trading strategies. Thanks for watching, and I'll see you in the next lesson.